Well, we've seen UACN last week formally applying to raise 30 billion naira from the capital market through a bond, not a convertible bond as has been reported, but a plain vanilla bond. Hakeen, Ogooniran, MD of UACN Property Development Company, joins me now live from our studios in Lagos to unpack some detail here. Thanks so much, Hakeen, for joining us this afternoon. A very interesting time that you're looking to come to the market with a bond. I mean, let's look at timing, because at the moment we're looking at a pretty lackluster market environment, whether it be in the equity or fixed income space, and investors, broadly speaking, sitting and in wait and see mode. So is timing, given investor apathy, a concern for you at all?
Well, I think in reality it's the current environment that actually gives us the confidence that the right thing to do is to issue a corporate bond. As we have also noted, there is a significant problem in the capital market. The money market is also in some trouble. And all corporate organizations who hitherto will have looked only to those traditional sources of revenue, of funding, have had to think out of the box to look at other ways of financing their investments. So for us as a company, we think the environment is very right and is good for us to go for the bond at this time.
Why going down this route? I mean, is a funding or accessing funding a problem in the Nigerian context, or are you looking at this as a better option than acquiring a short-term loan, for example, from banks?
Well, if you look at the nature of our business, we run real estate business and we undertake very large projects. Typically, the gestation period of those projects are between 18 months to sometimes 36 months. And if you have a funding model that gives you only access to short-term funding, CPs and what have you, of 60, 90 days, usually there's a mismatch between your assets and your liabilities. So we considered it very appropriate for us to look for medium to long-term funding that will give us the flexibility to run our business and match our assets and our abilities in a manner that is optimal for the business that we're doing. So in reality, it's just because we need to look outside the traditional sources of funding by looking at medium to long-term outlets, which the bond gives us that opportunity.
Of course, this is going to be done through a book building process. What kind of response are you getting from the investment community at this stage?
Well, the feelers that we have is that there's a pent-up appetite for investment in good instruments, which we believe ours is. We got a very good rating from the rating agency, and we got a confirmation from PENCOM that the rating is an investment grade rating. You know, so I mean, looking around and from the feelers that we have from the investing community, we believe that we're going to get very good response to the bond.
Any idea as to what price level we could potentially be looking at here?
Well, I think it's premature to talk about the price now, but if you know that typically corporate bonds are priced off the back of federal government treasuries, we're looking at something slightly above the rate of federal government treasuries. But I think we really have to wait for the book building process to really determine that, yes.
In terms of information with regards to the timetable for the bond issues, I mean, and when it will open, would we have to wait for that book building process to be complete as well?
We've gone to the very advanced stage of our timetable. We've already filed. We only have the final regulatory order to cross. We've responded to all the issues that SEC has raised, and we're hoping that in the next 1 week or two, we should be doing book building. Yes.
So let's go behind motivation now. I mean, what are you looking to raise this fresh capital for? And let's talk through the company's growth strategy moving forward, because for the full year 2009 and the first quarter of this year as well, results were looking quite weak. Profit after tax down 35% and 43% respectively, and we've seen turnover also indicate a slowdown in sales. So let's talk through your strategy, where this capital is going to be directed moving forward.
Okay, obviously 2009 was a very difficult year for everybody, but we still posted what we believe was a very impressive result. we are 13.3 billion turnover naira, and 2.8 billion turnover, 2.8 billion naira profit, and which we believe was quite good for that market. Now, for this year, in quarter one, we deliberately postponed the sales of some properties because we saw a recovery coming through, and we've indicated now because the past 2 months has witnessed significant recovery in that market, and we believe that that recovery will continue till the end of the year. Now, in terms of specifics, what we want to do with the bond, we're raising the bond in 2 tranches of 15 billion naira each. The first tranche, we're planning to pay down some of our short-term facilities, about 7 billion naira. And the second tranche, we're hoping to invest in some of the projects that we currently are running. Currently, we're doing like 8 major projects in the medium to luxury categories of the real estate market. We're doing what we call the Victoria Shopping Mall Plaza in Victoria Island, and we're encouraged by that project because we're just finishing phase 1. We've started phase 2, and both we got immediate patronage from 2 multinationals for the first 2 phases. Tomorrow, by the grace of God, we're going to be breaking the ground for phase 3, which is a mixed development, a shopping mall, event center, and residential apartment. So we're going to be investing part of this fund in phase 3. We also have like 6 other estates coming all around Lagos and in Abuja. We have Glover Green coming up. We have Cameron Green. We have Sunrise Estate coming up in Lekki. We have 2 projects coming up in Abuja, all before the end of this year. So we're really positioned to properly invest these bonds as they come into our kitty.